down the way. This is, what was I looking at before? Ren? Was it Ren? I think it was Ren. Where I was kind of postulating that this is the sort of thing that you would see happen. Okay, so if we go from this low up to this high, this is just the 1 hour time frame. It's not, you know, a million miles away from, you know, it's not like huge stuff, but it's just so, you know, this bottom that I'm taking in here, well, it is the last bottom here after this inverted head and shoulders move towards the top side and all that good stuff. It is certainly not like the last low that I could be using, which would be over there probably. But as you can see that we're just at the 236 here, and that comes in at 50 cents, and it's a nice round number anyway, so you've got that confluence of all of those things to be looking to. Okay, in terms of our highs to our lows, we've only really come up as far as breaking the structure of the downward trend just now by virtue of putting in that high. We have, of course, inverted head and shoulders ourselves outside of the downward trend by putting in the shoulders, the head and the shoulders, and then pushing it past at the 236 point here at 43 cents. And now we have gone on up as high as the golden pocket here and beyond, now back down again. So that's not dissimilar to the things we've seen elsewhere in the markets. You know, what you're looking at, if you want to talk about it from a pattern point of view, is that you either were operating along the lines of something like this, which has got the potential breakout, and the very eagle-eyed amongst you would see that this wick came down here and gave us a retest of the pattern as well. Or you'd have been looking along these sorts of lines just here, and it's essentially the same sort of idea really as well. 1, 2, 3 touches, 4 touches with this big this movement in the prices on down the way, and then the potential for a breakout. So just because we can, let's just do a measured move off the back of this and say, well, where could it go to? Now, this will represent a huge movement in terms of percentage value. So from that breakout point to the tops, you're talking about a 46% increase in price, but it's not impossible for it to do that. There are less ambitious targets for the price to move to, but just to draw back on this Fibonacci here, you can see that only just takes us past the 1 point, and it isn't until you get up to 77 cents that you get towards the 1618. When you zoom out and look at this on a bigger time frame, like the 24-hour time frame, then all of that suddenly seems very possible, you know, because it would be nothing outside of what we've done before. Inflection here, some car outside with its alarm going off, what are you going to do? Inflection here again, you know, all these consolidation periods, which then did see and it was moving at the time, that car, so it's one of those ones. Wonder if it was like Grand Theft Auto. So you can see here that, you know, up, doing very, very, very well. Big lows of volatility between these areas. You get highs that come in up here, then you get lows that come in down here. That was a 50% drop down in price between that one, by the way, and then up here towards its high, down towards its next low, a 15% price, you know, movement up here towards the high that we've just had. Okay, down towards the low that we've just had, a 30% increase in price. So have we done enough in terms of volatility in this section? Yes, we have. Have we done enough in terms of you know, duration spent cooling off a little bit? Yeah, we have. This is the 2-day time frame, don't forget it. This is the 24-hour time frame, so we've done enough, and everything else going along fairly nicely. We have got a measure move towards the top side, so is it feasible to talk about that point of view? And yeah, it is. It's okay, it's fine, and that then takes us in for the potential to come in up as high as 63 cents just here without really doing anything particularly radical as we've seen in the past. Now there are other ways to be looking at this, for instance just the generic sort of bear bull flag type idea, you know, and you could be looking at as well moves off the back of this thing in a variety of different ways that could take you up higher and higher. Yeah, ultimately they'll probably come in at around about that 77 cents zone of that next Fibonacci, should we not break the structure. And what does breaking the structure at this point mean? Well, with this nice period of sideways, what you can see then having happened is that we have, because of the moving average structural basis of these lines, this smooth area here, this smooth area where we're of course breaking down below, which would be bad, and that of course involves going down past the 236 over here. So like your rewarning of this is coming in at 43, movements down past 41 and a half or so is kind of, you know, an issue, but it's livable with. Doing the 100% retrace at this point here, not good, you know, coming in for an even lower low overall in terms of this structure here, not good, not really good, if that were to happen. But things are looking very, very, very possible, you know, in terms of recovering at least by the 618. We'll take it in from the lower one this time, just to give us a bit more breathing room. I'd say that things are very much more than possible to recover by the 618. As you can see here, the golden pocket lining up with where we see the Ichimoku cloud in the background there at 44 before continuing to go towards the top side. That would be the area to be looking to before you get involved in the stickiness of these types of price points, my precious, because when you're looking at these things, it's easier to be thinking along the lines of this type of idea by that stage. Pardon me. Where you'd be able to manage your risk and get a better reward much more accordingly than what you're looking at from right there in that post-breakout scenario. But to tie things together for people, then let's just look back at recent examples of similar sorts of structures. Now this is the 24-hour time frame for Bitcoin, but it's very much the same sort of a deal, where you have this overall structure followed by moving up the way, a big retrace off the back of that. Where did it come down to between these 2 points here in terms of Fibonacci, for example, taking it from that low, going up to that high, saying that, well, we came down as far as the 886, you know, a little bit more volatile, but in terms of structure, etc., we didn't break our previous structure. Then we moved on up thereafter, after we actually got no, we didn't move down as far as the 886. Let me see, I just said that wrong. Said that perfect, in fact. I said it wrong. I'm so glad. We came down as far as the 618. Sorry, perfect, yeah, right off the Ichimoku cloud. Just exactly the point that I was just making with regard to Civic. Okay, so what do you think of that? What do you think of that then? And has that revealed anything for you with regards to this one? I've never done the TA on this before. This is a completely fresh chart. There are other things that we could have looked to for better information, more betterment information here. Everything's going along fine so far. Yeah, it's the same market structure play as what you're looking at on Bitcoin last week. Okay, that's what that is. I hope you appreciate that. Oh, you did. Great. Thumbs up. Fantastic. Glad to see it. Right, let's just fly through this and make some episodes, okay? Give the people what they want. Let's put a baby in the oven. Is that right? No, a cake in the oven. No, wait. No, hold on. What people do the people want? What do the people want? Whatever it is, let's give it to them.